Assalamualaikum warahmatullahi wabarakatuh. We are from Foodie. So today we would like to present our business plan. Here are the F3 group members. First and foremost, I am Nurhusnahani binti Maksubi with metric number 280451. I will start my presentation with the executive summary. So Frosty is a product-oriented business that sells flavor sambal frozen homemade dumplings. It comes frozen, packed and sealed in one pack for just 35 ringgit per kilogram, consisting of 50 to 60 pieces. Our ideal customer would be someone who does not have much time to spend cooking at home. For instance, youth, working mothers, and also housewives. Besides selling the dumplings to the end users, we also sold at the retailers. Due to the current situation of pandemic COVID-19, we were advised by the government to shift our operations into digitalization instead of conventional operations. Therefore, we are using social media like Instagram, Twitter, Facebook as our platform to promote the products as well as Shopee. The customers can make orders through it, and we will deliver the orders to the doorstep. Next, let's move on to the main objectives of the business plan. The first one is to offer the best quality at a reasonable price. We are very strict in terms of the quality of the products that we provide and sell. This is because we want our products to be known for their amazing quality, but still, the price is very reasonable. Second one is to maintain the customer's loyalty, because we aim to build relationships with the customers directly, as we really appreciate them for buying our products. If they are satisfied with our products, it will directly help the business to grow. Thirdly, to generate positive cash flows and also sales. Frosty Foodies aims to maintain our cash flows and sales positively, because it will ensure the business revenue to stay ahead of the product cost. We focus on controlling the cost of operations while maintaining the profit margin. Lastly, to establish the business as premium dumplings, Frosty Foodies has aimed to initiate Frosty Foodie as one of the premium dumpling seller or distributor in Malaysia, so that everyone will acknowledge our product. Our Frosty Foodie values are a reflection of who we are and also what we stand for a company as a whole. Integrity. Integrity generates trust. As a company, it is our superior treasure. Second one, customer commitment. We are developing relationships that will make a positive difference in our customers' daily lives, as we provide them with instant cooked dumplings that will save much more time. The third value is respect for people and teamwork. We appreciate our people equally despite their races and religion, and also we always work together as a team. Lastly, effective and efficient. There are a lot of competitors out there, but we can only pull through only if we are able to satisfy our customers' desires and apply our own plans effectively. For the business summary, our main purpose is to provide our customers with authentic, safe and highest quality products at an affordable price. Furthermore, this business aims to develop and improve its competitiveness to compete with other companies or factories in the area. We also aim to expand our business by opening branches across Malaysia to encourage young entrepreneurs to start their business. From the chart above, we can see that the general manager is Mama Alif, followed by the finance manager, Nur Janti. Next, marketing manager, Nur Husnahani, that is me, myself. And for administration manager, Nur Sharafina and TV Ashri as an operation manager. Our company's vision is to be a frozen halal company that is popular among Malaysians and well-known throughout the world. The mission, the first one, is to improve people's life by delivering high-quality, safe and convenient dumplings regularly. The second one is to provide a conducive work environment in which our employees can perform at their best as a team. Lastly, to be responsive to the needs of customers and to ensure their satisfaction. I think that is all from me. Thank you. I pass the floor to the next presenter, Nur Sharafina.
Assalamualaikum Assalamualaikum, my name is A211, my meeting number 280442. I would like to talk about SWOT analysis and market analysis summary. SWOT analysis stands for strength, weaknesses, opportunity and threats. It's an analytical framework that identifies internal and external factors favorable and unfavorable to a company. There are two strengths for our company, which is save time, energy and cost, and provide affordable price. Our products provide incredible value in various ways, including money saving, nutrition and quality, time saving and energy saving. Career women who do not have time can get the dumpling quickly for their family by ordering from the website we provide. The price of our product are competitive. Price are placed based on the premium ingredient used and looking at market condition. The price of food is also cheaper than other competitors in our area, where we offer a price of RM35 for a pack of dumpling with 50 to 60 pieces compared to other competitors. Next, weaknesses. There are two weaknesses. The first one is not well known. Our company is a new business and need to promote more to compete with exciting company. Our company made something different for other company like unique packaging to attract the customer. The second one is no long-term customer. Usually, customers are still unaware of the product specialty. Therefore, owner and employee needs to work harder to get customer and become loyal business customer. The last one is threats. There are two threats which exciting competitor power and strength and new competitors. Competition with business producing the same product is a threat phase. Competitor who have been in the market for a long time have very strategy to strengthen their business. As business will also compete with new market if this business are successful. Your competitor entering the market will be a threat to the business. Foodie must create a strategy to ensure that Foodie remain the top choice of customer. Next, market analysis summary. One of the most significant aspects of a company strategy is market analysis. A market analysis is quantitative and qualitative evaluation of a market. It examines the market size in terms of volume and value, as well as the various consumer category and buying behavior, competition, and the economic climate. This comes from young people or as ratio. Relative of ratio, age 18 to 26 are scholars, recent graduate or are just starting out as workers. They are usually independent and live apart from their family. Our dumplings are an easy meal that is quite affordable for their financial living. Moreover, seeing a growing number of women in the workforce, we do believe this is a high thing to aim for working mother as our target customer. Their busy life is full of commitment as a worker. Mom and wife will be looking for convenient meals to fulfill family needs, especially in preparing food. Our frozen dumpling is a very ideal side meal since our product is short timely preparation that can reduce the investment of energy, time and cooking skill. Housewives, on the other hand, prioritize hygiene and nutrition food for their family. Market needs guide from white goods to produce for work at white cost and through distribution channel, eliminating the uncertainty that comes with developing a new product or service. Before launching our product for this upcoming season, our marketer discover this by doing 5 P analysis in order to achieve organization goal. 5 P consists of 5 decisions to be made, which are product, price, promotion, place, and people. The first one is product. Foodie offer product with the simplest, quickest, most versatile, and most convenient food service while maintaining the quality. The frozen dumpling will be one of their ideal meals. Every customer comes with a unique taste, so we decide to introduce our dumpling in a variety of fillings. Foodie is a dumpling for RM35 per pack for 50 to 60 pieces. Then the product is priced based on the profit margin of 40% of the cost, which they can be affordable by the target customer. The most important is that the selling price can cover all the purchasing and merchandise costs of the company. Moreover, the price is considered average among similar product in the same industry. It will not affect our company competitive in the industry. Next, promotion. Our promotion considers our short runs a digitalization business. Foodie promotes the business to social media platforms such as Instagram, Facebook, and WhatsApp. Customer will buy this when they have heard about them or notice the product in advertisement. We will use hard sell and soft sell skill to get our product. Place potential customer can get the product directly from our facility, which is located at 131 Jalan Puyuh Tutin, Taman Sri Puyuh. To make it more accessible, we also offer another option for customer to buy our product. First option is they can use shipping delivery if they are out of our facility area. Second option, we offer cash on delivery direct to their home. Customer can place the order by contact us on Instagram, Twitter, Facebook, or company phone number. We are also expanding our business to shopping the ideal place to develop our product. As a new name in the market, Foodie will ensure a positive experience for every customer. Customer will repeat the product if they find satisfaction in the customer service. We do hire sufficient sales assistant to handle customer orders or special requests and keep their skill up to date. Thus, it will not be a problem for them to deal with the customer and fulfill their requests and utility.
Assalamualaikum. My name is MA11 with metric number 280542 from Group 3. This part is about strategy and implementation taken by Frosty Foodie to achieve our profit goals. For the part marketing strategy, we're gonna try to focus on 3 things, which is social networking, reward of free gift, and also the packaging. So first, for the social networking, we will promote our merchandise through social media or online sites such as Instagram, Facebook, and WhatsApp. Because we know that nowadays everyone got their own smartphone to access at least one of these kind of social media. So the platform we choose is the one that very close to our targeted audience. Next is reward and gift. So to advertise our brand swiftly, we will give reward or free gift to attract more customers. So for example, for every 10 purchase of dumpling, we will offer for 1 dumpling as a gift to the customer. We also reduce the charge for COD for customers who buy 3 packets and above. Last is about packaging. We know that because of first impression are so crucial in the buying process, we will detail in the packaging design and color scheme that will appeal to customers who buy our product. In this part, we will talk about Frosty Foodie sales forecast. So for our sales forecast, we base on 12 months for one accounting period. We'll start to sell our product from December 2021 until November 2022. Our company reselling the product by 1 kg per packet, which means equal to 1 unit of selling. Price of sale is RM35 per unit. So for the first month of selling, we expect our sale is 1000 unit and will increase 100 unit for every month. As a result, we estimate our dumpling could reach for 18,600 unit of selling by the end of November 2022. So the total revenue is 651 ringgit. This part is about our company master budget. For master budget, we prepare for operational and financial budget. So I will talk about operational budget first. After the calculation for 12 months of selling, we estimate our sales budget is RM651 ringgit. For merchandise purchase of budget, our cost of goods sold could reach for RM380 ringgit and 800. Last, for operational budget, our cash selling and administrative expense budget is RM136 ringgit, 470 ringgit and 86. Next, we will move for financial budget. Our company set a company policy in preparing our financial budget. For instance, for cash collection, 80% from account receivable will be collected in the month of sales. Meanwhile, the balance for 20% will be collected for next following months. After calculation, our cash collection total is RM381,780 ringgit. For cash disbursement, 60% of account payable will be paid in the month of purchase. Meanwhile, the balance 40% will be paid for next following months. After calculation, our cash disbursement total is RM372,320 ringgit. To calculate depreciation for property, equipment and plant, we use straight line method. For the part of salary and wages, the salary and wages are different based on employee contribution. For example, the gross salary for chief executive is 2,300 ringgit. Meanwhile, for finance manager, human resource manager and marketing manager is RM1,800. Gross wage for runner for COD is RM1,600 ringgit. The total we spend for salary and wages is 2,300 ringgit.
Good day everyone, my name is Divya Kopalakrishnan. Today, the first slide I would like to present about cash budget. Frosty Foodie record the cash budget for every month until November 2022. I choose August an example to illustrate how we find out the ending cash balance. So at first, we should record the beginning cash balance and sum up with cash collections. So the total cash available on August 2022 is Rm224,254 ringgit and 80 cents. Then we have to deduct merchandise purchases and selling and administrative to find out excess, which we got 176,761 ringgit 65 cents on August. Lastly, we need to sum up the financing, that is interest. So the amount we got for ending cash budget on August is 177,011 ringgit 65 cents. Next is projected statement of cash flow for the financial year ended 30th November 2022. At first, we have to record profit before taxation and should sum up with depreciation of property, plant and equipment and interest expenses. So Frosty Foodie got 142,582 ringgit 20 cents for operating profit before working changes in working capital. Then we need to sum up with increase in finished goods, inventory and account receivable, and then need to deduct increase in account payable. So Frosty Foodie got 132,082 ringgit 20 cents for cash generated from operation. And then Frosty Foodie got 129,082 ringgit 20 cents for net cash inflow from operating activities by deducting interest paid. Lastly, Frosty Foodie deduct net cash outflow from financing activities, which is 50,000 ringgit, and should sum up net increase in cash and cash equivalent at beginning of financial year. The next slide is our statement of financial position for December 2021 and November 2022. Total non-current asset on December 2021 is 23,500 ringgit, while on November 2022 is 20,300 ringgit. The current asset on December 2021 is 100,000 ringgit Malaysia, while on November 2022 is 196,702 ringgit 20 cents. Lastly, total liability and equity on December 2021 is 123,500 ringgit, while on November 2022 is 217,002 ringgit 20 cents. Next is break-even analysis. The formula of BEP is fixed expenses divided by contribution margin per unit. So that the BEP of Frosty is 9,502 units. Moreover, the formula of converting BEP units into ringgit Malaysia is fixed asset divided by contribution margin ratio, which is 40%. So the break-even point of Frosty is 333,294 ringgit 50 cents. Then cost volume profit graph. It's a graph that shows the relationship between the cost of units produced and the volume of units produced using fixed cost, total cost and total sales. Fixed cost means cost that remains same, which is 133,317 ringgit 80 cents, while total revenue is started with 0 and then continuously increase, which is 525,000 ringgit. Lastly, total expenses increase from 133,317 ringgit 80 cents to 447,867 ringgit 80 cents. The last slide that I will present about target profit analysis. Target profit analysis is the estimated amount of profit that the management hopes to achieve during an accounting period and is forecasted and updated regularly as per the business progress. Frosty Foodie set a target to earn a profit of Rm200,000. So the formula of unit sales of target profit is fixed expenses sum up with target profit and divide with contribution margin per unit, which we got 23,758 units. Thank you.
Assalamualaikum warahmatullahi taala wabarakatuh. My name is Muhammad Alif bin Teguh Hamzah, metric number 280534. I'm from Group 3 and I'll be presenting about the margin of safety. So what is margin of safety? Margin of safety is the gap between the forecasting sales and also the break-even point, which indicates that the point of sales can be decreased before the company becomes unprofitable. So margin of safety is also considered as the cushion or drop in sales that the company can absorb before incurring of any losses. So margin of safety can be in three forms, which in unit, currency, ringgit Malaysia, or in percentage. So let's move on to our company margin of safety. So you can get margin of safety by deducting the budgeted sales and the break-even point. So in unit, we will get of 9,098 units margin of safety before the company can incur of any loss. And for in currency or ringgit Malaysia, we will get of 317,705 ringgit and 50 cent. And last but not least, in percentage, we will get of 49% margin of safety. What if analysis is a technique used to determine how the projected performance are affected by the changes in assumption that the projections are based upon. So this technique is to compare the different scenario and potential outcomes based on the fluctuating conditions. So we have decided to analyze based on three conditions, which is what if the selling price increase, what if the variable cost per unit increase, and what if the fixed cost increase. So let's move on to what if the selling price increase. So what if the selling price increase of 25%? So you will get a new selling price which will affect both the contribution margin and also the break-even point. So you will take the old price, which is 35 ringgit, will be multiplying with 125%, and you will get a new price of 43 ringgit and 75 cent, and you will get the new CM or contribution margin in ratio is 52%, and in unit is 22 ringgit and 78 cent. However, for break-even point in unit will become 5,853 units, and in currency or RM is 256,077 ringgit and 80 cent. So this indicates that when the sales price increase, the contribution margin will increase. However, for the break point will decrease. Okay, next we analyze the variable cost per unit increase of 30%. So the new variable cost per unit 27 ringgit and 27 cent will be affecting the contribution margin and also the break-even point. So you will get the new contribution margin ratio is 22%, and in unit is 7 ringgit and 73%. So in break-even point in units is 17,236 units, and in ring sales is 605,099 ringgit. So this indicates that when variable cost increase, the contribution margin will decrease. However, the break-even point will increase. Okay, then the last one is what if the fixed cost increase to 200,000? So what as we know that the fixed cost will not affect the contribution margin, but it will affect the break-even point. So the contribution margin ratio will remain unchanged, which is 40%, and the new break-even point unit is 28,806 units, and in sales is 500,000. So this indicates that when the fixed cost increase, the contribution margin will not be affected. However, the break-even point will increase. Alright, so we will be moving on to the business ratio. So business ratio will indicate how the business operation throughout the accounting period. So we will be discussing on the profitability ratio, because this ratio is showing how the company can utilize the profit from its income. So from the gross profit margin, we can see that our company Frosty Foodie has less than 42.86 cents in the gross profit for every ringgit of sales. So next is profit margin. So our company able to gain 20.95 cents in net income for every ringgit of sales. Last but not least, on the return on the assets. So for every ringgit, our company of asset, our company generate of 62.85 cents in net income. Alright, so next we will be moving on to solvency ratio. So solvency ratio is a ratio to examine the ability of the company to meet its long-term debt and obligation. So based on our solvency ratio is debt to asset. So debt to asset is showing that our company has only 0.0328 debt for every 1 ringgit of asset. Activity ratio is a financial metric that indicates how efficiently is a company leveraging assets on its balance sheet to generate cash and also revenue. So based on inventory turnover ratio, we can see that our company Frosty Foodie able to sold off 42 times of our inventory. It means that our company able to sold the product efficiently. Next, we will be moving on to the total asset turnover. So our total asset turnover is 3.82 times per year to generate sales. So this indicates that the company is effectively using its asset to generate more sales. Last but not least, the fixed asset turnover is 10.92 times per year to generate sales. So for instance, this is showing that the company is effectively investing in fixed asset to generate more income. Liquidity ratio is a measurement of company ability to pay debt obligation and its margin of safety through the calculation of metrics. So based on current ratio, for every 1 ringgit of current debt, our company have 27 ringgit and 63 cents to pay the debt. So next, the quick ratio. So what's the difference between this current and quick ratio is on quick ratio, we are not taking into account the inventory. So for every 1 ringgit, our company have 26 ringgit and 39 cents to pay its debt. So last but not least, our cash ratio. So our company have more than enough of cash and equivalents to pay our current liabilities, which is 25.15%.